Happy Thursday. We are heading into the last stretch before Friday, and the markets are starting to reveal their intention. Let's scan them with the three-point playbook. It's all about quality, upside, and timing. This is Hans-Henrik Nielsen. He's stacked with answers. My name is Jesper Baehrenz, and I'm loaded with questions. And Hans-Henrik, yesterday, the three-point playbook portfolio beat the US index by 1%. And if we see it overall on the year to date, we're up 3.8%. What do you have to say for your defense?
Well, there's not much to complain about there. It's we probably shouldn't expect 2% per week for the rest of the year. That would be amazing.
That would be an incredible upside, but 3.8%, that is really something on the US index right now, and that's where we stand. We keep you posted every Monday. That's what we talk about, the three-point playbook portfolio on Mondays. If you have a question for us, do write us at FOMO@MyStockScanner.com. And on the show today, Jyske Bank closes at an all-time high, while GenMab jumps after a major upgrade from, Jyske Bank. That's today's first three-point playbook that we look into. Globally, AI momentum is front and center as TSMC, as they are called abroad, or Taiwan Semiconductor. They delivered stronger than expected Q4 profits and signals sharply higher capex ahead. What that means for you and your investment, you'll get to hear. And as it's Thursday, Liam Flavelle declares Microsoft a winner. We'll tell you why. Wall Street is under pressure. Nasdaq posts its worst day in more than 4 weeks. Big techs were sliding and US banks are in the red. Plus, a farmer surge in Finland. That's what we're going to talk about on the show today. And we have a mail in regards to a German upstart. But first, we have number of the day. And Hans-Henrik, 24.27, a stock that went up like that yesterday, all because of the name, wasn't it?
It was.
We'll tell you about it
later, yes.
We'll tell about it at the end of the show, what it all means. It's a little bit cryptic, but we'll tell you about it. First, we'll start on the Danish market. Yesterday was a fantastic day for Jyske Bank, went up by more than 7.13% and ended in an all-time high. Hans-Henrik, we're not judges, but I'll ask you anyhow, is it deserved for Jyske Bank that they're sitting at an all-time high?
Jyske Bank is running a good business, definitely. If we take a quick look at them here on my screen, if I can find that. First of all, as let's see,
it's moving a little bit slow right now.
That is how it is.
Yeah.
If you have listened to us before, you know that our quality score is not that important when it comes to banks because they are a bit differently structured. This is a bank where earnings per share is set to drop a bit, maybe a bit depending on the analysts. Some are saying it should go up, but it is a good, solid company. They are making fine return on their capital and everything. What I'm a bit concerned about is that when we go into our value chart, that is where we take the price earning and multiply it by the PE. The first question was, is a good quality company? And yes, Jyske Bank is absolutely a decent quality. But the pricing of it, and when we look at the pricing, and we can see that Jyske Bank in history have been somewhere between 5-6 in PE and up towards 9-10-ish, then we can see that they are right now at a very, very expensive area. That means they are what we call priced for perfection. It doesn't take much bad news for it to be hammered down. So I would not put my money in it right now.
The thing is that Jyske Bank put their money behind another company in that sense that they upgraded GenMab from 2,000 to 2,300, and instantly the market turned positive in regards to them. 4.8% up in yesterday's market, and giving a little bit back today. I'll ask the same question as I did with Jyske Bank. Is it deserved that GenMab sits at 2,300 in the estimates from Jyske Bank?
Well, first of all, 2,300, that is what, 2% above what it is now. So it's not like it's a massive hike from here. GenMab is a good quality company, definitely. It is biotech, it is medical research, and that always gives some volatility because it's very dependent on a single drug that could either perform well or less well. Overall, it's a good quality. Revenue is going up. Return on capital is absolutely good. They are not over leveraged in any way. Good, solid company. When it comes to the valuation, we are bit in the dark here because as you can see, it has been all over the place. It has been trading at PEs of above 100, and it has been trading at PEs at 5 or 10 or something like that. And what we like to do when we look at what the potential is in a stock, we look at when have the big investors in the market judged it cheap or expensive in the past. And right now we cannot really see any structure in that. And that is why we haven't taken it. We did say to our members back here, when it broke up here, we said, be aware there might be something in GenMab, but we are not taking it. And we were up talking about it here again. But it's not like we are, we're not annoyed that we didn't take it because it didn't follow our rules.
And that is the most important thing, especially from the 3-point playbook portfolio, is that we follow the strategy that we have, that we stick to it. And yes, we'll miss a train once in a while, but we have plenty of freight trains in our portfolio. One of the stocks that we really keep an eye on, even though that we're not in it right now, we have been in it, and that's TSM, as it's called on this latitude, or in our area, it's really called TSMC, Taiwan Semiconductor. They profit in Q4, the fourth quarter for 2025, were up more than expected on AI demands, and they see a much higher capex in 26. Let me just start with that one word, even though there's not Wednesday and not Wednesday word. What does capex mean?
Yeah, capex means capital expenditure, and let's try and just look at an example here. Well, let's take TSM as we're looking at. First of all, good quality company, no doubt here. But if we go into the overview, the summary, there's a lot of numbers in here. But when we get down here, we find something called capex per share. That simply means how much money is a company putting back into developing new that could be new inventions, building a new production facility, maybe taking over someone else's tech, something like that. CapEx is simply investing in the future, in the capability of producing more profit in the future. So we do like to see companies that are spending a fair amount of CapEx or money on CapEx. And what we have seen in AI is that this number have completely blown up. It's absolutely insane. And now TSM is out saying it's going to be even more.
And Liam Flavelle, who normally takes a look at the tech stocks for us, he calls TSM the most important company in the world. He really push aside NVIDIA and go, this is the one.
It is. And that is, a lot of people think that NVIDIA are the ones making the chips. They're not. They're designing the chips, and they're good at that, and the entire, you could say, infrastructure in the chip and around the chip. However, it's TSM that makes the chip, most of them anyway, and it is the Dutch company ASML that makes the machinery that TSM uses to make the chip. So TSM and ASML right now, at least until the Chinese come up with a copy of them.
And there's no doubt they're going to jump in the US market when it opens this in a couple of hours, because the pre-market really tells us that already. Question is there more gas in the tank? And that's one of our favorite questions in regards to stocks like this when we know they're going to see a jump.
Yes, first of all, we can see here in TradingView, we can see that they will definitely jump something like 7%. Is there more gas in the tank? Well, let's have a look at it. You know, it's a good quality. We already covered that. The pricing of it, that is a bit where it comes to with these tech companies when they're growing this fast, because normally we do like to get the stock when it's down here in the value chart, because that leaves a lot of upside. That is what I guess Warren Buffett would call margin of safety, or Graham would call a margin of safety. That means that you can actually be quite a lot wrong and still have a massive upside. When you get up here, it's a bit more reliant on you being right. If we add another year here, and if we say they just grow by 25% also per year in their earnings here, well, we can see that over the next couple of years, and this is simply multiplying expected earnings per share by price earning, we can see that there's almost no downside and there's a lot of upside. Personally, and I know I'm not going to get that today because it's jumping 7 or 8%. Personally, I would like it to just either dip down into the cheap zone down here somewhere, or at least go sideways a bit until we get closer to this mid zone. But I will probably not get it, and it might be a bit too late to jump on for me.
Hans-Henrik, we're going to look at Microsoft in a minute because it's Thursday Tech, but I'm going to ask you something because we were in this stock, but we went out of it.
Yes.
In that sense, again, it goes to the strategy. It goes to the signals that our system sends us, and we stick to that no matter what our gut tells us.
Yeah, absolutely. We got in, I can't recall the exact date, but it was somewhere down here. And then we followed it up. We almost sold it here, but gave it just a bit of room because of all the things that were happening in AI and support areas. And then we went out up here. We made a very healthy profit. Right now it has gone up. And will it continue up? Probably with the earnings we just saw here, but it could have gone the other way, and it gave a guidance saying that is completely terrible. We didn't think it would be, but again, it could have been happening, or a bit less good than people expected, and it could have collapsed. So we follow our rules. If it shows a bit of sideways here and we see some good technical setups, we might take it. But there are 100,000 stocks to choose from. Yes, if we don't get on this, well, we are still up 3.8% for the year. So no complaining here.
It's okay to be boring as long as you have 3.8 book year to date so far. But we need to take a look at another major freight train, and that's one that Liam Flavelle is telling about in his write-up today on Thursday Tech, and that's Microsoft. And Hans-Henrik, he declares Microsoft a winner. In what?
Yeah, well, Microsoft is just a rock solid company. And what we have seen is that when AI started, it was all the pop-ups. It was OpenAI and all that. They wanted to be first, and they were first. And there's a movement a bit back towards Microsoft, Google. Liam is, as we can see here, that is in his tech article, he is writing about both Google and Microsoft, and it's our belief that they will be the long-term winners in the entire AI infrastructure. But that is also because they have a lot of liquidity. And right now, OpenAI they are reliant on finding $500 billion in an IPO, and that might not happen.
One thing for sure is that you can read much more about why he's thinking that positive about Google and Microsoft in his article that you find at our platform, MyStockScanner.com. Free membership for a month. Go in, check us out, look us under the hood, see what's going on, and see why we are following our strategy of the 3-point playbook. We are shifting focus a little bit here, but I will just tell that NASDAQ locked its worst day in 4 weeks yesterday due to big tech, but also because the banks were sliding. And overnight, we've seen a little bit of easing up on the commodities. Silver has been giving back a little bit. Now it's crawling up again. Oil has lost a little bit in value, but let's focus on the banks because they are sort of leading off the earnings season. That's how it is. That's how it's structured. They're the first one to go up. And again, we saw it the other day and we see it again yesterday. Bank of America, Wells Fargo, Citibank all lost on the stock exchange yesterday.
Yes. What we have said for a while, for quite a long while, was that when the interest rates started to go up for real, that would give the banks a lot of advantages. And we can see here back from, it has been a really long time of insane gains in the banking. However, right now, they have started posting something in the guidance that we are a bit worried about and that we have said all along, saying The second they start to mention words like they have less of a what is called an interest rate spread, meaning what is the difference between what they can charge from the customers and what they're paying to Fed. That is one thing. And another thing is when they start to report that they're putting more money aside for losses, meaning that they start to expect people not to be able to pay their mortgage, their car loans, their credit card balance off. And they have started to say that now. And that means that people are getting a bit spooked and saying, okay, was this the run for the big banks? Remember, though, the trend is not broken for real. It was a bad day, but there have been a tendency that a couple of the banks have underperformed on the revenue, and then they overperformed on their earnings per share because they have fired a lot of people, for instance. But I think we are looking at, there could be 5 or 10% more in banks, but I think we're looking at kind of the top. If we are looking at the valuation again, we are seeing the same or kind of the same as in Jyske Bank we talked about. This is an area they have been trading between 9 and 13, 14-ish in price earning, and they are at the top now. If there's just the slightest bad news, it starts to sell off.
And this was Wells Fargo we took a closer look at.
Yes.
They dropped yesterday 4.6% and kind of led the downtrend. Bank of America went down by 3.8%, Citibank down by 3.3%. And we get new numbers today that we can take a look at, and that's because it is, as said, beginning of earnings seasons, and today we get Morgan Stanley, Goldman Sachs, and BlackRock. So there will be more numbers to crunch even for us. But it could give an interesting signal that maybe, just maybe, we should look elsewhere than America. And how about that? Somebody wrote us at FOMO at MyStockScanner.com and asked, can you take a look at a Swedish jump? A Finnish jump. It was a pharma stock yesterday, Orion, that jumped 12%. How come we didn't get into that, Hans-Henrik?
Well, first of all, I must admit, I'm not looking too much toward Finland. They are trading euro, though, so it's not like I could just use my euro currency account for that. But I think I actually will add it to my screener because there are some reasonably good candidates up there. Something like Orion here, 99 in quality score. That is insanely good. Earnings per share going up, revenue going up. It's not like it's a small company. It's something like, was it 7 or 9 billion? 9 billion euros in market cap. That is not that small. So overall, we can see green, return on capital employed, free cash flow is reasonable. When we look at the valuation, we can see, and that is a good learning moment here, because some people tend to ask us if this only works because the strategy is in the big markets and everyone is looking for the same. And first of all, everyone's not looking for the same. But here we can see in a fairly small niche market in Finland, we can see good quality coming down to the cheap end of the value chart here, and then bouncing upwards. It's just textbook, and we could have, if we saw it, we might have been able to get in here. It wasn't the best entry signal in the world, so I probably wouldn't have gotten in. But it's a good example of how quality combined with good potential, cheap pricing is basically a universal rule for good profits.
There's no doubt that you can use the 3-point playbook and the tools in there for any stock and take a look at it. You just need the data. And the reason why I mentioned that is because Søren wrote us at our email and asked in regards to a fairly new stock called Otto Bock in the German market. And the problem is, Hans-Henrik, we simply can't pull up the data that sort of the building blocks for our strategy.
As I've said a million times, I think, investing for me is a math game. It's a statistics game, but that means I need data. And for instance, in the graph, what I look for is where are the big guys coming in and where are they going out? And on this, I can't see anything. If we look at Wells Fargo here, we have a lot of data and we can see where are the swings, where are big guys coming in and out. We can see our MTI indicators down here. When are they turning red or green? But they need data. And when we look at something like this, there's not enough data to generate an indicator. Also, we do like to buy them a good quality company. All right, let's look at the numbers then. There aren't any. And that is because it's too new. That is also why we never get into IPOs when OpenAI goes public next year. It'll be a couple of years before we can go into it, because we need that data to see, is this a good solid thing moving forward, where are the big guys coming in and so on. Okay, that costs us some percentages once in a while, but that is just a part of our strategy.
You normally say that if we were going for IPOs, might as well go to the casino and play on red or black, depending on what your
At least for me, yes, because I simply don't know enough about it. There are probably people out there that is making decent money from it. I don't, because I'm not good enough at it.
I know that you're supporting Viborg, your so-called football team over there. But would you put money on would you put money on Viborg?
Only if they were in a game against the FCM, I think. Then it would be a sure win.
For it is that I want to sort of segue into putting money on something just simply because of the name. We had number of the day, 24.27% up yesterday because of the name.
Yeah.
The name is Greenland Tech, and you might believe, like a lot of Americans did, that it has something to do with Greenland. Hans-Henrik, that's not the case. It's a company from New Jersey, but it's a number of the day, and it went up by 24%.
Yeah, and we actually looked at why it was called Greenland, and it was something like green because they are focusing on to be very green in their technology, and land is just something that often the Midland, it's just a solidity name. But Greenland has nothing to do with the island.
No, they manufacture electrical industrial vehicles such as electric forklifts. Yeah. And I sat there in New Jersey, and I hear a rumor that the CEO is called Tony Soprano. I'm not sure about that information.
You can see in the pre-market they're already dropping 5 cents again. So I think people have realized it. It reminds me back before up towards the tech bubble back in 2000. I saw a water cleansing company that called something New York Water something, and they changed the name so it ended with Tech. The second they did that, it popped up on all screens on all big investors, and they bought up with left and right, and it went up 1,400% in a day. And then people realized they only cleaned water and didn't have anything to do with internet, and it dropped again. The same with AI, we see it these days. As soon as we should call our MyStockScanner Greenland Defense AI, whatever blockchain, I'm sure it would be a lot more worth a lot more. However, Greenland technology, that will drop again. Just watch it.
Just for fun. Bring it up in the 3-point playbook. Let's see. Is there any upside? Should we just play on the name or play on the industry? Oh, no. That looks weird.
There's not much in here. It's not like it's a completely dumpster fire. It's not the best of the best. However, when we look at this one, it's simply I can't even recall the size of it. Yeah, $17 million. So it is ultra small cap thing. We wouldn't touch it. And if people are looking at this thinking, yay, it could go up by 500%. Well, no, because we don't have enough data. We can't rely on the data here. That is too skewed. So no, I wouldn't touch it at all.
No, and that said, and it doesn't matter that Tony Soprano is the CEO or isn't. That's not what we look at either. And let's not do that joke anymore. Now it's done. Listen, Hans-Henrik, before we go, we look ahead to what's going to go on in the day in the economic calendar. We get a little bit of initial job claims. There's a little PMI number coming out. And to those who doesn't know what it is the PMI number? And it's the S&P Global Factoring PMI. What does that mean?
Yeah, PMI stands for Purchasing Manager Index. And that is basically, you measure how, it's not only the purchasing managers, but it's basically the people that are employed with buying in stuff for the companies. If they are happy, if they believe in the future, they buy more stuff. They put more on the shelves. So when that is above 50, normally it's from 0 to 100. When it's above 50, it's normally an expansionary economy. When it's below 50, it's contracting. There was another number yesterday that was a bit more interesting. That was a PPI. I know it's a lot of letter soups here, but that is the producer price index, and that was actually inflation in the production chain, and that was higher than expected, indicating that we might see some more upwards inflation pressure. That spooked the market a bit yesterday.
And in earnings we get from Morgan Stanley, Goldman Sachs, and BlackRock, as said, it is the big banks and the money industry right now that's sort of leading off the season. Next week, we will, of course, keep you posted on numbers coming there. But for tomorrow, we look forward to the Friday face-off, where we pit two stocks against one another, and we broadcast in Danish at 12 o'clock. And do check us out on our webpage, MyStockScanner.com. You'll find articles and in-depths on our pages. You can also find some of them on our Facebook groups. And then I would say, do ask us questions. FOMO@MyStockScanner.com. Liam Flavelle, who's on vacation, will normally do answering some of the tech side. Hans-Henrik will take care of the rest. And if we don't take them up on the show today, we might do it tomorrow. See, we are at the end of the road for the show today. Thursday Tech at MyStockScanner is all about staying disciplined. The strongest opportunities often appear at the end of the week. So remember, quality, upside, and timing. That's your guidelines when you use the 3-point playbook. We will be back in Danish tomorrow at 1 o'clock or at 12 o'clock. And then we will have English broadcast on Tuesday at 1 o'clock. That's when Liam Flavelle is back from his much deserved vacation. Happy investing out there. Take care. And see you soon.